Good evening. You're tuned into Bizworld with me, Sabrina Zainal. Malaysia's economy is on a strong footing to attract quality investments. International Trade and Industry Minister Datuk Seri Tengku Zafrul Abdul Aziz said China's move to reopen its borders next week bodes well for the nation, given that China is Malaysia's largest trading partner. In an interview with CNBC this morning, he stated Malaysia is expected to register a GDP growth of 8 to 9% in 2022. Datuk Seri Tengku Zafrul also noted that the unity government is very much committed to the nation's participation in the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, which came into effect last November. He added that Prime Minister Datuk Seri Anwar Ibrahim has signed all the necessary administrative agreements to ensure that exports and imports can continue under the ratified deal. Malaysia's gross domestic product GDP is projected to moderate to 3.9% in the first quarter of 2023 amid the risk of a global economic slowdown. Now, the global economic slowdown is likely to drag the country's export performance and commodity prices, and this would also be weighed by the threat of rising inflation. This could in turn trigger further financial tightening on the back of Bank Negara Malaysia's overnight policy rate hikes. Nevertheless, the downside risk on growth to be limited given the lower political risk premium following the outcome of a unity government formation and resilient private spending backed by various policy support, such as the continuation of subsidies and cash transfer programs for the B40 group. Maybank Investment Bank expects Malaysia's economy to moderate at 4% this year compared to its forecast of 8% growth for 2022. Its chief economist, Suhaimi Ilyas, attributed this to softer growth in domestic demand and private consumption as the pent-up spending dissipates following the full economic reopening last year.
Together with the outlook of some moderation in public consumption growth, in line with the lower government operating expenditure allocation in budget 2023. In addition, the outlook of global economic downturn results in growth of exports and imports of goods and services kind of slumping in 2023.
Maybank IB is also looking at another 25 basis point hike in the overnight policy rate by Bank Negara this month, justifying the inflation trend and growth in wages. This from the record low of 1.75% to reach 3%, bringing back the pre-COVID level. On the equity market, Bursa Malaysia is expected to flourish from a challenging year of 2022. The benchmark FTSE Bursa Malaysia KLCI is forecasted to close the year at 1,660, 12% upside from the current level. In the meantime, Maybank Investment is maintaining its positive call on the Malaysian oil and gas sector amid Petronas' robust activities. It said 5 segments, which are drilling, fabrication, offshore support vessel, pipelines and maintenance operations, are expected to see an increase in activities this year. The bank expects Petronas to meet its 100 billion ringgit core net profit estimate for 2022. It also said demand for oil is projected to pick up this year, fueled by the reopening of China's economy and increased flight travels worldwide. Meanwhile, Kenanga Research expects activity levels to stay robust locally on sustained capital expenditure spending by Petronas. RHB Investment Bank maintained its overweight call on the banking sector after projecting a sector net profit growth of 15.6% in 2023. This compared with 7.6% last year, underpinned by tailwinds from rapid rate hikes and normalization of credit cost. The research house also expects banks to pay higher dividends this year, given sustained earnings accretion and resilient asset quality. It noted that banks that offer high dividend yields of 6 to 8% are Maybank, Alliance Bank, and Affin Bank. The key earning drivers in 2023 include net interest margin expansion, sustained loan growth, lower credit cost, and the normalization of the effective tax rate post the one-off prosperity tax known as Cukai Makmur. Meanwhile, key risks to its projections are a sharper than expected deterioration in global economies, escalation of geopolitical tensions, and regulatory risks. That's all the time we have for Bizworld. I'm Sabrina Zainal. Thank you for investing your time with us.